Hello money makers. Welcome to today's top 5 market updates. We start today in the USA, where existing home sales report is scheduled to release at 10 o'clock Eastern Standard Time. Existing home sales are expected to have declined 5.6% in May to a seasonally adjusted 4.10 million units, up from a 17.8% plunge in April. Nomura economist Louis Alexander said, "Given the sharp 21% month-over-month decline in pending home sales during April, we expect another decline in existing home sales in May." Furthermore, new home sales are expected to have bounced 1.9% in May to a seasonally adjusted 635,000 units, up from a modest 0.6% increase in April. Next up, American Airlines Group Incorporation seeks $3.5 billion on new financing. The company plans to secure $3.5 billion in new financing, to improve the airline's liquidity as it grapples with travel restrictions caused by the coronavirus. It plans to raise $1.5 billion by selling shares and convertible senior notes due 2025, the airline said in a statement. Additionally, it will offer $1.5 billion in senior secured notes and that it intends to enter into a new $500 million term loan facility due 2024. Our next update is from Australia, where RBA Governor Lowe speaks about the economy outperforming. The Reserve Bank governor says the Australian dollar is up off recent lows because of how well the nation has handled coronavirus so far, but warns that will change if there is no major economic reform. He said a recent rise in the local currency from COVID-19 lows around 55 US cents to 68.5, including a recent brief stay above 70, was a reflection of the nation's pandemic outperformance. He suggested tax, infrastructure, human capital, industrial relations, regulation and R&D as key areas for change. In the currency market, dollar holds gains as fear of pandemic gathers pace. The US dollar touched a 3-week high and commodity currencies were stalled on Monday, as renewed worries about a second wave of coronavirus infections sent investors into safer assets. The greenback was marginally lower against the Australian and New Zealand dollars, and steady on the yuan, euro and British pound. While the reduction in central bank currency swaps, on one hand, suggests a return to normality, it also marks a pullback in one aspect of the Fed's enormous support for global markets. Our final update is from the commodities sector. Oil prices slid as demand worries outweigh tighter supplies from major producers. Oil prices have been supported by a recovery in fuel demand globally following a collapse in April to May during virus shutdowns, as nations worldwide resume economic activity. In Canada and the United States, the number of operating oil and natural gas rigs fell to a record low last week, even as higher oil prices prompt some producers to start drilling again. Brent crude fell 11 cents, or 0.3%, to $42.03 a barrel, while U.S. crude was at $39.69 a barrel, down 14 cents, or 0.4%. Thank you for watching. Subscribe for regular updates. Only on Capital Street FX.